Well, interest rates are rising because inflation just seems to be completely out of control. And interest rates are the gravity of the housing market. But let's face it, with over 10% of Canada's GDP coming from housing,
Do you even know what that means?
not really, but just listen. The Canadian economy is addicted to real estate. And I'm pretty sure what that means is if the market goes to crap, so does the economy. Or maybe it's the other way around. So now what? Well, I think there is a possible solution where the government could possibly keep the housing market fairly strong and rein in inflation at the exact same time. And I'm going to tell you what that is after I ask you to please pump up the like button for the YouTube algorithm to help me get this information out to even more Canadians. And please take a moment and subscribe to the channel to stay up to date on the market here in BC. Because still less than 30% of you watching right now have subscribed, and that means that if you haven't subscribed, you could miss the next video.
Aw, shucks, they're gonna miss your face again?
Maybe it's your face they don't like. So please go ahead and subscribe now. And now on to the fix for the economy that's addicted to real estate. And I believe that fix can be done with a little something called the stress test. No, not that type of stress. The mortgage stress test in Canada is a policy put in place by OSFI. And even though OSFI sounds like it might be a species of bird, it actually stands for the Office of the Superintendent of Financial Institutions. In other words, the boss of the banks. And the whole thing kind of goes like this. If the banks offer you a mortgage for your home at 3%, you now have to qualify for that mortgage at 5.25%, or as if your payments were to be made at 5.25%, or 2% higher than the mortgage rate actually offered, whichever one is greater. So that means in this case of a 3% mortgage, you would still need to qualify at 5.25%. But if the bank is offering you a rate of 4.5%, those two numbers now become 5.25 or 6.5. So in this case, you have to qualify for your mortgage at 6.5%, even though those will not be the payments that you're actually making when you buy your home, because the bank's giving you 4.5% for probably 5 years. Now, with every 1% increase in interest rates that the Bank of Canada increases, we can likely see 10% of the market price come off, or affordability gets 10% harder. And with how fast rates are rising and where the Bank of Canada says they want rates by the end of the year, we could see up to a 30% drop in the market. Ceteris paribus, apparently, or if everything else is equal. But with interest rates not being the only factor, the stress test is actually a tool that could be used to prop up the housing market if prices were to decline and things were to get really, really bad. You see, the stress test is reviewed by OSFI every December ahead of the following year to see if it needs adjusted for current economic conditions. And in the past, when the market was too hot, OSFI would increase the stress test to try and cool it off. But now the market is cooling because interest rates are rising very, very quickly. Well, there's a very good chance that OSFI could now relax the stress test, reversing what was done in 2021 when they increased the stress test from 4.75% to where it is now at 5.25%. But let's say they don't actually mess with the percentage like they did last year. They still have that pesky plus 2%. So maybe it would look something like this. You keep the minimum qualifying at 5.25%, but instead of 5.25% or 2% over top of the bank rate that's being offered, that could be relaxed down to maybe 1%. So now, given the previous example at 4.5% rate actually offered to you by the bank, your qualification would go from 6.5% down to 5.5%, making home ownership more affordable. Well, kinda. Or there's a chance that OSFI could remove the stress test altogether, allowing more people to qualify for higher mortgages and, well, basically kind of saving the market. But I do want to go on record of saying I don't think that is likely. And I also think the stress test for our overall housing market has been a very, very good thing. Because even in this market where prices have increased 40% in just a year, this policy saved people from driving those prices up even faster. And if all of this still doesn't make sense to you, you can book a call with me right now down below in the description with just a few simple clicks to talk about your situation and see if now is the right time to purchase or if you should wait. And please always remember, if you are not in my market here in Surrey in the Fraser Valley, but you don't know who to trust in your market, reach out to me as well so I can connect you with somebody that I know, like, and trust, but wherever you live. Please remember to subscribe and stress out that like button for the YouTube algorithm. Check out this video here on YouTube or now on audio podcast apps everywhere. Thanks for watching, and we'll see you in a couple of days.